Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features a conversation with Nathalia Artus, the Director of Community Development and Reinvestment at Atlantic Union Bank. I love this topic, and it was really fun to talk to Nathalia. We kind of covered things from how the shift to more digital delivery has an impact on economic mobility and how you think about that in the context of serving diverse communities that might have different ways of traditionally interacting with the bank and ensuring that you're reaching entire communities. We talked a little bit about ESG and how you measure community impact, how you think about different measurements, different objectives, and how you really think about success and what that looks like, both in the context of kind of the ESG, but also the profit for the bank, the business value from reaching a broader community. And finally, we talked a little bit about their investment into minority depository institutions, a little bit about what Upstart has done in that space, and particularly how we can help those institutions not only with cash, because they've often seen an influx of cash of late, but how we can help them put that cash to work to further their missions and better serve the communities that are in, often minority communities. So I think that's a really great topic. So without further ado, please enjoy this conversation with Nathalia Artus, the Director of Community Development and Reinvestment at Atlantic Union Bank. Nathalia, thanks so much for joining the podcast today. I appreciate you making the time.
Thank you so much for the opportunity to be here. Thank you, Jeff.
Yeah, I know we had a little bit of trouble scheduling this, but I've been looking forward to the conversation, so I'm glad it happened today.
I'm super glad it happened today as well.
Now, a lot of my guests talk about digital transformation and the acceleration of adoption of digital technologies that was driven by COVID. And a lot of that they think about from the technology point of view, but I think given your role, I'd love to ask you how you think about how that's impacted economic mobility, the kinds of customers you can serve, if there are caveats or issues, because certainly not all consumers have the same access or comfort with digital technology. So, where do you see from a kind of not just community reinvestment, but reaching out to different parts of the community, what's happening and how the digital transformation is kind of shifting the landscape there?
Well, thank you for that question. It's really interesting because before kind of like the pandemic, we looked in digital for CRA mostly on how can we deliver financial literacy for different communities and different platforms, right? So we actually have 100% financial literacy platform that we can deliver, education to folks on their mobile, their desktops, and so forth. But whenever we had the pandemic, we were just kind of, pivoting, and then we did see that there was a 92% increase in customer transaction volume for example, one of our money transaction platforms, which is called Zelle. And then that single data really provided us with more information and power to invest in ways that we can have and provide more technology to our customers, including our low and moderate income customers, which is the focus of CRA, right? Which is a regulation that's been out there for over 40 years and is, again, really focused on low to moderate income communities and individuals. So we developed a report, and it's run quarterly now, and we have the intention of doing this on a monthly basis, where we're going to measure the usage of the digital platforms by low-income individuals and customers.
Oh, interesting.
And then we can have more opportunity to see where we've been active and highlight opportunities and locations where we can be more active. And that's just another touch point where we can engage our community partners, right? Ask for their help in identifying channels and ways to reach out to the communities where we operate.
That's about 92% increase in adoption. That's startup type growth numbers, frankly. That's what everybody in Silicon Valley wants, is doubling year over year. That's pretty hard to adapt to, I imagine. Were there any lessons you learned, or you've seen the adoption in certain areas, or like what were your takeaways from that, or areas where you got feedback that said, hey, here's something that we need to improve about how we're enabling this, or where people are struggling to move to this new kind of interaction mode?
We're still in the process of working through that, right, and exploring how we can leverage where fintechs have been successful. And one of those points is through regarding credit availability. We do know that 50% of the customers use a fintech to obtain a personal loan. So there's definitely an opportunity to build upon that and to bring more value to our customers. And one of them has been through our partnership with Upstart.
Well, so tell me a little bit about, I obviously about our partnership, but tell me a little bit about why engaging with Upstart was important to the bank. Like what was it that made that interesting for you?
So another interesting data point, right? So it was shared with us through the Upstart team that there are several studies that have shown that less than half of the Americans have access to prime credit. Yes, yet 80% of the Americans have never defaulted on a loan. So that gap really suggested that lending using the traditional credit score models can be excluding or are excluding a large population of credit-worthy borrowers.
Yeah, I mean that's such a key point to me when you talk about reaching to low to moderate income communities is how do we, I think everybody intuitively knows that borrowers are more credit worthy than most banks are willing to. I mean, a subprime pool isn't like 90% losses. It's like, right, it's like 20, 30% losses, which means there's a ton of good applicants in that category that we're just not able to tease out. And of course, the history of credit scores in the US would indicate that there's going to be a disproportionate portion of low to moderate income or communities of color in that percentage that's being cut for credit score. So it's a fascinating question to me of how do we not just take CRA from we're doing the thing on the side to meet our obligations and make it actually a part of the core business of the bank to actually serve those communities more actively, not just from a social good, but from a business point of view.
Oh, absolutely. From a business point of view, so we have our core values, which is we care, we're committed, and we're courageous. And nothing like that matches to our CRA. We're care, we're committed, and we're courageous. So those are the core values of Atlantic Union Bank, and that is kind of the drive for our business. And CRA is the basis for all of that. And so we couldn't be more, driven into our business strategy. And when you think about a business that's publicly traded, you have to think about ESG, the environmental social governance, and what investors are expecting from an organization. So again, CRA is another platform that delivers into those three levels as well.
Has your approach to CRA compliance, I'm very familiar with the CRA, and yet I often feel like the exact ways in which an institution is asked to comply and measured and rated, it's still, maybe black box is the wrong thing for a guy who works at an AI company to say, but it feels like a bit of a black box to me. So you don't have to explain it all here, but I'd love your take on, are there shifts in how you see your institution or others approaching compliance with and meeting the requirements of the CRA? Because it feels like a place where it's not the same way for every bank. It's not the same approach or the kind of criteria and requirements. And I wonder if there are shifts in how people are approaching their requirements and maybe I might call them opportunities to serve communities through the CRA.
That is so interesting that you bring that up, Jeff. So it shows that you already know more about CRA than some of the CRA practitioners. But CRA is an art and not a science, right? Each bank does it differently. So the regulators have a guidance on how we collect data, of course. Everybody does the same way collecting data, but how you use that data and how you interact with the communities where we operate can be very different bank to bank, right? Again, CRA was enacted by the Congress in 1977, over 40 years ago. It's a very old rule and law, and it does require the banks to help meet the credit needs of their communities. And then in particularly neighborhoods, again, and I'm going to keep repeating myself, with low and moderate income communities and individuals. But other than that, you have guidances that were issued like 20 years ago, and then again 10 years ago. And think about how the banking industry has changed in the last 10 years, the last 5 years, the last 2 years. So we can now take a photo of our check with your phone, and that's considered a deposit, right? And then back in the day, you had to go to an actual branch, and that's what was the definition for CRA for location. But once you take a deposit in Arizona for a bank that's in New York, what does that mean? So CRA is working through a lot of reforms, and there is a change from the regulatory agencies to make it more seamless and to update the regulation to bring it up to speed to today's needs and to the industry's where we stand today. So like I said, CRA is an art and not a science. I don't think that it will ever change to be a science, that we're all going to do the same thing. But it is kind of a different way on how different banks approach this regulation.
I'm going to answer that way. The next time I have to go through my CRA training, I'm going to say CRA is an art, not a science. There is no definitive answer to your question. I don't think my chief compliance officer is going to accept that answer on the test, but I might have to use it.
You may get a smile, so that's a lot of a step ahead.
Yeah, no, that's fascinating. And I know part of your role is kind of this input of the CRA and the community impact into the ESG. How do you think about measuring impact in a community and an ability to serve like low to moderate income communities versus, more affluent communities. Obviously, like things like mortgages are so easily targeted at an affluent community. Lots of people buy homes, lots of people have income, and harder in a low to moderate income community where there might be more renting, et cetera. So how do you think about both, improving your ability to serve those communities, but also importantly measuring the impact your policies and practices are having, so you can tell if you're, doing what you can and being effective and meeting the goal of serving the needs of that community?
Perfect. So I think I got two is like how, we can do it, and then how we can measure, right? So to measure for impact. So how we can do it is more and more through digital platforms, right? We have to figure out how we can reach out to our customers where they are, and a majority of them are on their phone. So we have to think, what we can do about that. So one of the things that we have is a narrow focus on how we can serve our communities, and it's only through 3 pillars inside the entire range of what you can do under the Community Reinvestment Act and CSR and ESG. And it's affordable housing, financial literacy, and economic development. So we really focus on those 3, and also financial literacy. So we have, and I already mentioned before, it's a program that's 100% digital and accessible anytime, anywhere, with any device. And we also offer services such as online budgeting and money management tools, and over 1/3 of our customers are signed up for that service. So we would love and hope to see those numbers increasing. So how do we measure that? Is through data tracking, is through reports, and with our community partners. So we invest in a lot of CDFIs, which are community development financial institutions, that deploy technical assistance for individuals and for small businesses as well, that are in its majority minority owned or low income, low and moderate income owned, or in low and moderate income census tracts, that we can also rely on their reports that kind of funnel back to us based on our investments in those organizations. But again, we're always looking to have a fully digitized end-to-end solution for our customers.
Yeah. What do you find to be effective metrics to track, or, for impact? Like you talked about data tracking and analytics, but I'm curious, are there like key things that you find, or hey, these are useful metrics and they help us really separate the wheat from the chaff in terms of maybe a CDFI that's having more impact than less, or a program or an initiative that's like really achieving results versus one that's kind of like, I'm a biz dev guy outside of my podcast hosting, and I was talking to my boss yesterday. You guys, there's a lot of biz dev guys who do deals that don't do anything for you. They sit on the shelf and they look good in the press release, but they don't drive any actual value. And I'm always curious for programs in this space, how you think about being able to find the ones that are meaningfully helping the community versus the ones that, hey, we put a partnership press release out, we can say we did something, but ultimately you're not really reaching and assisting the community. How do you think about the ways that you can find the programs or track the things that are really making a difference?
Yes, so again, I'm going to only focus on the 3 pillars. So we have affordable housing, financial literacy, and economic development. So for starting with economic development, the last one first, we figure out and then we look for CDFIs and organizations that can provide us with information of how many dollars have we unlocked in the community for each dollar that we invested in you. So, if you are a CDFI to make small business dollar loans, like make sure that, you have a system where you're capturing the amount of money that you have deployed. So if I invested $1 million, have you deployed, $5 million? So 1 to 5, we can count it that way. If it's financial literacy, it's how many people we have served, how many folks have actually entered and read the articles and took the courses, and then how many of those people are in low and moderate income communities or low and moderate income individuals. And for housing, that's easy. How many affordable housing units have been created or have been maintained? Because that's another issue, especially here in Virginia. Northern Virginia, if you've heard, Amazon has an HQ too showing up in Northern Virginia, and that's put a huge pressure on the housing market. So how many affordable housing units can we maintain that's going to be offered for low and moderate income individuals?
Interesting. That is fascinating. I wanted to ask you about one other area that I know you guys have invested in, which is not just CDFIs, but minority depository institutions, MDIs. Tell me a little bit about the work you guys have done. It's something that's near and dear to our heart. We've done some partnerships with the National Bankers Association of Minority Depository Institutions. But what kind of work are you doing, and how do you think we as a community can support those institutions best?
So it's really interesting. So minority depository institutions were the heart and soul with a lot of communities, Black communities in America. And they got, disinvested, disenfranchised for many, many years. And recently, they have received huge attention from other institutions and efforts to receive deposits. So they have figured out that they can attract a lot of capital. And what we have kind of found out through partnering with other banks and CRA officers is that there is an issue in deploying that capital. So we have gotten together to create an MDI kind of committee between the Community Reinvestment Act officers from several different banks and the D&I officers from several different banks to figure out how we can create more guidance for our institutions and for our industry on how to support MDI. So this is all still in flight, and I'm very excited to hear that you guys are also invested into the deployment of more efforts and resources for MDIs.
Yeah, I feel like it's such an interesting point that I think there's been a flood of capital to these banks. It's easy to write, if you have the money, it's easy to write a check. But I do think the question of how can you deploy that, and then the point you made earlier, how do we use more sophisticated ways to understand credit risk? Because obviously there's not exactly a one-to-one ratio between MDIs and low to moderate income or lower credit scores, but there's a high correlation between those things. And so the communities they serve on average are lower income, lower credit score. And the question of how do you help them be able to deploy that capital effectively, but also into those communities and to serve the greatest number of people in those communities that they can, I think is really important to say, hey, funneling money there is good, but helping them utilize the money to invest in the communities, that's really the heart and soul of what they're trying to do. And I think where we can try and be helpful to those efforts.
Yeah, and we're not doing this alone. So that's the other thing. It's just like not one institution or one organization or one association is working on this. We actually putting our hands together and rolling our sleeves and trying to put our heads together. So as you know, the banking industry, banks can be quite competitive, and we're offering a commoditized service sometimes, but where we can truly partner is in community development, right? I don't think that we compete with our peers as far as when it comes to think about how we can best serve our community. And if you can do the money and then we can do the resources, let's just hold our hands together and then make sure that the community receives the best outcome of our partnership.
Yep. Awesome. Well, Nathalia, before I ask you my final three closing questions, are there any topics or areas you wanted to talk about, expected me to ask about, and we didn't get a chance to cover today?
No, I'm just excited to have had our chat and conversation, and I think that we can definitely continue to bring more institutions to think about how we can leverage where fintechs can be successful with helping more access to credit for low moderate income individuals.
Yeah, we're excited to be partnering with you guys and other institutions on that. 'Cause I think it's a tremendous opportunity to better serve the American public, and particularly those communities that have been so often left out of more traditional approaches to credit. So that's very exciting to me. All right. Let me give you my rapid fire, at least rapid fire questions. You don't have to give rapid fire answers, but I always like to ask the same three questions to end these podcasts. So the first one being, what's the best piece of career advice you've ever gotten?
Well, one advice that I picked up and carry along is that you don't want work to be work, right? It needs to be something that you can enjoy. And if you can do that, you can build a great career on it and truly enjoy what you're doing every day. And I'm very passionate about what I do, and I'm very lucky to truly, truly enjoy doing what I do every day. So doesn't feel work.
Doesn't feel like work if you enjoy. I do think people sometimes say life is too long and life is too short, and I think which of those it feels like is depending on whether you're enjoying what you're doing or not. Sometimes, whether you like it. So, I like that. All right. Second question. What's the best piece of advice on consumer banking or consumer lending that you've gotten?
I think that it goes back to when we started, right? AI lending can really play a huge role in identifying and approving more creditworthy applicants and improve their access to credit and access to affordable credit than ever before.
All right, I like that. That's true. And then what's your bold prediction for the future? This is my favorite. Hold your feet to the fire, bring you back, and we can tell if you're right or wrong. I have had to make one or two of these, but what's a bold prediction for the future?
Well, I'm putting my future goggles on.
We got future goggles. I like it.
Yes, I'm gonna look on my binoculars, and I'm gonna see that digital is going to be the future of banking, right? And partnership with fintechs are going to be the future of banking. There was a time where banks were not paying attention to fintechs, that they were paying too much attention to fintechs. I think that now we're going to have a lot of partnership with fintechs and really explore the digital space, especially with cyber currency or cryptocurrency.
Wow, you just threw cryptocurrency in there right at the end to throw everybody through a loop. I like that. I would even pivot yours a little bit, which is to say, fintech partnerships may be the future of banking. I think it's also the future of fintech, where I think you're going to see more banks working, more fintechs working with banks, or some probably becoming banks, in which case they're just banks at that point. In my mind, they're just, that's fine. That's fine, but like you get to charter your bank, so that's a path forward. But I think bringing together the technology and latest developments from fintechs with the capabilities and communities the banks have is really how we're gonna best serve the community. So I love that answer.
Yeah, with our franchise, I mean, how can you better partner with that? A lot of fintechs we have found talking with fintechs is that they don't think of themselves as technology companies, right? They think of themselves as customer experience or customer service companies. So it's like, this is all we need. We're here to serve our customers. So what better way to deploy that with the organizations that have become experts on it?
Love it. Excellent. Well, Nathalia, thanks so much for making the time. This was a lot of fun, and I appreciate you sharing your insights with the audience.
No, thank you so much for the opportunity to be here, Jeff and Upstart.